Given the price history and forecast for Bitcoin, a long-term investment strategy appears to be the most suitable approach. While the recent price action has shown some volatility, the overall trend suggests an upward trajectory. The forecast price indicates a continued upward movement, with prices expected to hover around the $102,000 to $103,000 range in the coming weeks. Therefore, a long position in Bitcoin is recommended. The entry price should be around $102,000, allowing for a small buffer below the current price. The stop loss should be set at $95,002.76, which is the support price identified by the system. The target price should be $106,000, representing a potential upside of approximately 4%. This strategy capitalizes on the bullish forecast while managing risk through a well-defined stop loss. Based on the provided information for Bitcoin Cash, a short-term investment strategy appears to be the most suitable approach. The 2-week price change exhibits a slight downward trend, and the 1-week forecast predicts further declines. While the support price at $368.90 provides a potential floor, the resistance at $434.30 suggests limited upward movement in the near term. This bearish outlook in the short term makes a short position more attractive. Therefore, an aggressive short-term investment strategy for Bitcoin Cash would involve entering a short position at the current price of approximately $435. The stop loss should be set at $445, aiming to minimize potential losses if the price unexpectedly surges. The target price for this strategy would be $420, aiming to capitalize on the predicted price decline. This approach allows for a relatively quick trade, aiming to profit from the anticipated short-term downturn in Bitcoin Cash's price. Given the provided price information for stacks, a cautious investment strategy is recommended. The 2-week price history shows a fluctuating trend with a slight downward bias. The forecast indicates a continued decline over the next week, reaching as low as $1.23. While the support price at $1.008 provides a potential floor, the current price is already near its historical lows. Considering this bearish outlook and the potential for further losses, a short position appears more suitable. To execute this strategy, an entry price of $1.40 would allow you to capitalize on the anticipated decline. A stop loss should be set at $1.453, slightly above the current price and the resistance level, to limit potential losses if the price unexpectedly rises. The target price could be set at $1.25, aligning with the forecast and providing a reasonable profit margin. This strategy prioritizes risk management and aims to profit from the expected price decline in stacks. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a short to medium-term approach. The historical prices show a fluctuating trend with a slight downward bias in the recent past. The current price is hovering near the support level of $3,138.07, suggesting a potential for a bounce back. The forecast indicates a continued downward trend, with prices potentially reaching as low as $3,110. However, the resistance level at $3,473.41 indicates that there is still potential for an upward move if the market sentiment shifts. Considering these factors, a long position is advisable with a target price of $3,300, aiming to capitalize on a potential rebound towards the resistance level. The entry price should be set at $3,180, slightly above the current price and below the support level. The stop loss should be placed at $3,130 to minimize potential losses if the downward trend continues. This strategy allows for a moderate risk-reward ratio while aiming to capitalize on potential short to medium-term price fluctuations. Based on the provided information for Ripple, a short-term investment strategy appears most suitable. The 2-week price history demonstrates fluctuations around the $3.10 mark, with the forecast suggesting a continuation of this trend, albeit with a slight upward bias. The current price sits near the support level of $2.6649, indicating a potential for a bounce back towards the resistance level of $3.1756. Therefore, a long position is recommended for a short-term investment. An entry price around $3.05 would allow for capitalizing on any upward momentum towards the resistance level. The stop loss should be placed at $2.95 to limit potential losses if the price fails to rise. A target price of $3.20 would provide a reasonable profit margin while avoiding overexposure to potential price corrections. This strategy leverages the short-term bullish sentiment indicated by the forecast and price history, aiming to capture gains within a relatively short time frame. Binance Coin's recent price history shows volatility with a general downward trend. The forecast predicts further declines, reaching as low as $639 in the coming weeks. Given this bearish outlook, a short-term investment strategy focusing on a short position appears most suitable. An entry price of $680, close to the current price and slightly above the immediate support level, allows for capturing potential downside movement. A stop loss at $686, above the entry price, protects against unexpected upward surges. The target price should be set at $658, aligning with the forecast and providing a reasonable profit margin before reaching the significant support level of $622.75. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided stellar price information, a cautious investment strategy focusing on the short term seems most appropriate. The historical price data reveals a recent downward trend, with the forecast suggesting further declines in the coming week. While the support price at $0.3497 offers a potential floor for the asset, the resistance level at $0.4215 indicates a significant barrier to upward momentum. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $0.420, close to the current price and the resistance level, would allow for immediate profit potential. The stop loss should be set at $0.430 to minimize risk in case of an unexpected price surge. The target price can be set at $0.390, aiming to capture a portion of the predicted decline while staying ahead of potential support level bounces. This strategy allows for a controlled exposure to the market, aiming to capitalize on the short-term bearish outlook for Stellar. Based on the provided information for Toncoin, a conservative investment strategy would be to adopt a short-term position with a focus on capitalizing on potential price fluctuations within the near future. The historical price data reveals a volatile trend, with fluctuations both upward and downward. The forecast suggests a continued downward trajectory, with prices potentially reaching as low as $4.60. Considering this outlook, a short position would be advisable. An entry price of $5, slightly above the current price, would allow for a buffer against potential short-term price surges. A stop-loss order should be set at $5.1, mitigating risk in case the price unexpectedly rises above the entry point. The target price would be $4.80, aiming to capture a portion of the projected decline. This strategy allows for potential profits while managing risk within a short time frame, capitalizing on the anticipated downward movement of Toncoin. Given the price history and forecast for Cardano, a short-term investment strategy appears to be the most suitable approach. The recent price action shows a downward trend, with the forecast suggesting further declines. While the support price is at $0.845, the current price is hovering above this level, indicating a potential for further downside movement. Therefore, a short position on Cardano is recommended. An entry price of $0.976 could be considered, as it aligns with the current price and provides a buffer above the recent lows. The stop loss should be set at $0.999 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.933, slightly above the lowest predicted price in the forecast, allowing for a reasonable profit margin while managing risk. Based on the provided Litecoin price data, a medium-term investment strategy appears most suitable. The historical prices demonstrate a volatile trend with both upward and downward movements. The forecast suggests a continued upward trajectory, reaching approximately $127 within the next week. However, the resistance price of $136.94 indicates a potential ceiling for this upward movement. Therefore, an optimal investment strategy would involve taking a long position on Litecoin. The entry price should be set at $118, aligning with the current price and the forecast's initial point. The stop loss should be placed at $113, slightly below the recent support price, to minimize potential losses. The target price should be set at $127, aiming to capture the projected price increase. This approach allows for capitalizing on the potential upward momentum while mitigating risk with a well-defined stop-loss level. Based on the provided data for Doge-Coin, a bearish investment strategy appears to be more suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The historical prices also show a consistent downward movement, with the price hovering near the support level. Therefore, a short position on Doge-Coin is recommended for a short-term investment perspective. An entry price of $4.19, aligning with the current price and recent lows, would be appropriate. The stop loss should be set at $4.46, slightly above the recent resistance level, to limit potential losses. The target price should be set at $3.6979, the support price, aiming to capitalize on the anticipated price decline. Given the price trends and forecast for Aptos, a cautious investment strategy would focus on a short-term approach to manage potential risks. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Aptos could drop from its current price to as low as $6.94 in the coming week, while the support price sits at $5.75 and resistance at $8.73. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $8.19 would be ideal, aligning with the current price and allowing room for price movement before entering a short position. The stop loss should be set at $8.49 to protect against any unexpected price recovery. The target price should be set at $7, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $5.75. This strategy aims to limit potential losses while capitalizing on the predicted downward trend in Aptos. SE's price history shows a recent downward trend, with the forecast indicating further declines. The forecast suggests SE could drop from its current price to as low as $0.312, while the support price sits at $0.2944 and resistance at $0.4166. This indicates a bearish outlook in the short term. Given this trend, a short position would be the most suitable strategy to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $0.364, aligning with the current price. The stop loss should be set at $0.378 to protect against any unexpected price recovery. The target price should be set at $0.312, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.2944. Based on the provided price information for Ethereum Classic, a short-term investment strategy appears most suitable. The historical price data shows fluctuations within a relatively narrow range, with a slight upward trend over the past 2 weeks. However, the 1-week forecast suggests a potential consolidation or slight decline in prices. This indicates a cautious outlook for the short term, making a short position a more prudent choice. An ideal entry price for a short position would be around $26.50, aligning with the current price and the potential for a slight pullback. The stop loss should be set at $27.10, safeguarding against any unexpected price surges. The target price could be around $25, aiming to capture potential profits from the anticipated price decline. This strategy allows for capitalizing on the short-term price fluctuations while mitigating risks through a well-defined stop loss. Based on the provided Polygon price information, a cautious investment strategy is recommended. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The current price is hovering near the support price, suggesting potential for further downside movement. Considering these factors, a short position seems more suitable for capitalizing on the anticipated price decrease. An entry price of $0.442, slightly above the current price, would allow for a small buffer against potential short-term fluctuations. The stop loss should be set at $0.449 to limit potential losses if the price unexpectedly rebounds. The target price should be set at 42 cents, aligning with the forecasted lowest price, allowing you to secure profits before reaching the support level. This strategy prioritizes risk management while aiming to capitalize on the prevailing bearish sentiment in the short term. Given the price trends and forecast for AEVO, a cautious investment strategy would focus on a short-term approach. The historical prices show a clear downward trend, with the forecast indicating further declines. The forecast suggests AEVO could drop from its current level to as low as $0.251, while there is no clear support or resistance level. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy would involve entering a short position at $0.291, aligning with the current price and the forecasted price. The stop loss should be set at $0.301 to protect against any unexpected price recovery. The target price should be set at $0.267, slightly above the forecasted lowest price, allowing you to take profits before the market hits a potential low. Given the provided price history and forecast for optimism, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near the support level. The forecast further indicates a continued decline in the coming week, suggesting a potential for further downside movement. Therefore, a short position on optimism is recommended. An entry price of $1.65 aligns with the current price and the forecast, allowing for potential profit as the price moves towards the predicted lows. A stop loss should be placed at $1.71 to limit potential losses if the price unexpectedly rebounds. The target price is set at $1.50, capturing a significant portion of the projected decline while leaving room for potential fluctuations. This strategy balances risk and reward, aiming to capitalize on the anticipated downward trend in optimism while mitigating potential losses through a well-defined stop loss. Given the price trends and forecast for STRK, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the forecast indicating further declines. The forecast suggests STRK could drop from its current price to as low as $0.334 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $0.385 would be ideal, slightly above the current price to allow for a small margin of error. The stop loss should be set at $0.399 to protect against any unexpected price recovery. The target price should be set at 35 cents, aligning with the forecasted lowest price, allowing you to take profits before the market hits potential support levels. This strategy aims to minimize risk while still potentially capturing some of the anticipated price decline. Given the price trends and forecast for Solana, a short-term investment strategy focusing on a long position appears to be the most suitable approach. The historical price data demonstrates a general upward trajectory, with the current price hovering near the support level of $237.99. The forecast suggests a continued upward movement towards $258 in the coming weeks, indicating potential for further price appreciation. The resistance level at $257.68 presents a potential ceiling for the immediate price surge. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $252. The stop-loss order should be placed at $238 to mitigate potential downside risk. The target price should be set at $258, aiming to capitalize on the predicted price increase. This strategy allows for potential profits while minimizing risk by exiting the position if the price falls below the support level. Based on the provided price information for Jupiter, a bullish investment strategy is recommended. The historical price data shows a general upward trend, with recent prices hovering around the support level of $1.0505. The forecast price indicates continued growth, reaching $1.14 by the end of the period. This suggests a strong potential for Jupiter to appreciate in value. Therefore, an investment strategy with a long-term perspective is advisable. A long position should be initiated at the current market price, which is slightly below the support level. The stop loss should be set at $1.0505, the support level, to protect against significant price drops. The target price should be set at $1.1337, the resistance level, aiming to capitalize on the anticipated price increase. This strategy allows for potential profit while managing risk effectively. Based on the provided price history and forecast for render, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a fluctuating trend, with recent fluctuations indicating potential volatility. The forecast suggests a downward price movement over the next week, aligning with the recent price decline. This suggests a bearish outlook in the short term. Therefore, an investment strategy involving a short position on render is recommended. A suitable entry price would be around $6.85, allowing for a potential profit margin before reaching the support price. The stop loss should be set at $6.98, the highest point in the recent price history, to minimize potential losses. The target price could be set at $6.55, considering the forecast and aiming to capture a significant portion of the anticipated price decline. This strategy capitalizes on the short-term bearish outlook for render while managing risk through a well-defined stop loss. Based on the provided price information for Solana name service, a cautious short-term investment strategy is recommended. The 2-week price history shows a fluctuating trend with a slight downward bias. The forecast suggests a continued downward movement in the coming week, reaching as low as $0.194. The support price is at $0.195, indicating a potential floor for the price. Considering this outlook, a short position on Solana name service appears to be the most suitable approach. An entry price around $0.210, slightly above the current price, allows for a small buffer while still capitalizing on the expected downward trend. A stop loss at $0.215 would help mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.198, aiming to capture a portion of the anticipated decline while avoiding excessive risk. This strategy allows for a short-term profit opportunity while acknowledging the inherent volatility of the cryptocurrency market. Given the price trends and forecast for Doge-Coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend, with the current price hovering near the support level of $0.32188. The forecast suggests a slight downward trend in the coming weeks, indicating a potential for further price dips. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.344, aligning with the first forecast price, would be a suitable starting point. The stop loss should be set at $0.355, slightly above the current price, to protect against unexpected upward movements. The target price should be set at 32 cents, aiming to capture a portion of the potential downside movement while staying mindful of the support level. This strategy allows for a short-term profit opportunity while minimizing risk exposure in a volatile market. Based on the provided information for PEPE, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a downward trend over the past 2 weeks, and the forecast indicates further declines. The price is currently hovering near its support level of $0.0000107, suggesting that it may test this level before potentially rebounding. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set slightly above the recent high of $0.0000160 to minimize potential losses. The target price could be set at $0.0000107, aligning with the support level, allowing for a potential profit if the forecast proves accurate. It is important to note that this strategy carries inherent risks, and investors should carefully consider their risk tolerance and market conditions before making any investment decisions. Given the current price trend and forecast for SHIB Inu, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, and the forecast indicates further declines in the coming week. The support price sits at $0.0000169, suggesting a potential floor for the price, while the resistance is at $0.0000211, indicating a ceiling for upward movement. This suggests that SHIB Inu may be consolidating before a potential further decline. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.0000199 aligns with the current price and the forecasted downward trend. A stop loss should be set at $0.0000204 to protect against any unexpected price recovery. The target price should be set at $0.0000187, slightly above the forecasted lowest price, allowing you to take profits before the market hits the support level. This strategy allows for potential gains while managing risk effectively. Given the provided price history and forecast for Dog with Hat, a short-term bearish strategy appears to be the most suitable approach. The historical price data reveals a consistent downward trend over the past 2 weeks, with the recent price hovering around $1.20. The forecast predicts further declines, reaching as low as $1.02 in the coming week. This suggests a lack of bullish momentum and a high probability of continued price depreciation. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of $1.20. The stop loss should be set at $1.28, slightly above the current price, to minimize potential losses in case of an unexpected price reversal. The target price can be set at $1.1, aiming to capture a portion of the anticipated price decline. This strategy capitalizes on the bearish outlook and aims to profit from the expected price drop in the short term. Based on the provided price history and forecast for Doge-Coin, a cautious short-term investment strategy is recommended. The historical prices show a clear downward trend over the past 2 weeks, with the forecast suggesting further declines in the coming week. Although there is no information on support and resistance levels, the consistent downward movement indicates a bearish sentiment. Therefore, a short position is advisable. A suitable entry price would be around $0.00500, aligning with the current price and the forecasted low. The stop loss should be placed at $0.00530, slightly above the recent high, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.00450, anticipating a further decline based on the forecast. This strategy aims to capitalize on the anticipated downward trend while managing risk through a well-defined stop loss. Given the price trends and forecast for Near Protocol, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests Near Protocol could drop from its current price to as low as $4.40. This indicates a bearish outlook in the short term. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $5, aligning with the current price and near the resistance level. The stop loss should be set at $5.15 to protect against any unexpected price recovery. The target price should be set at $4.60, slightly above the forecasted lowest price, allowing you to take profits before the market potentially rebounds. Based on the provided Internet Computer price history and forecast, a short-term bearish investment strategy appears to be the most suitable. The price history shows a fluctuating trend with a slight downward bias over the past 2 weeks. The forecast also indicates a continued decline in price over the next week, suggesting a potential opportunity for profit by shorting the asset. To execute this strategy, an entry price of $9.10 would be appropriate, aligning with the current price and the forecasted decline. A stop-loss order should be placed at $9.30 to minimize potential losses if the price unexpectedly rises. The target price for this short position would be $8.60, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes capital preservation with a defined stop-loss while seeking to capitalize on the predicted price decline. Based on the provided injective price history and forecast, a short-term bearish strategy appears most suitable. The historical price data shows a fluctuating trend with a slight downward bias. The forecast predicts further price decline over the next week, suggesting a continuation of this bearish momentum. Considering these factors, an investment strategy focused on a short position in injective is recommended. A suitable entry price would be around $20.30, near the resistance level. A stop loss could be placed at $20.80 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $19.24, aiming to capture the anticipated decline towards the support level. This strategy capitalizes on the short-term bearish outlook for injective while employing risk management techniques to protect potential losses. Based on the BTC price information provided, a cautious investment strategy focusing on the short term would be most appropriate. The historical price data shows a volatile trend with both upward and downward movements. Although the forecast suggests a slight upward trajectory, the support price of $408 indicates a potential for price correction. Considering this, a long position could be taken with a conservative approach. An entry price around $410 could be considered, allowing for some room for price fluctuation before entering the trade. The stop loss should be set slightly below the support price at $408 to minimize potential losses in case of a sudden price drop. The target price could be set at $425, aiming to capitalize on the potential upward movement predicted by the forecast. This strategy allows for a balanced approach, mitigating risk while still aiming for reasonable returns within a short time frame. Based on the provided price information for THETA network, a cautious investment strategy is recommended due to the recent downward trend and the forecast suggesting further declines. The historical price data shows a consistent downward movement, with the recent price hovering around $1.97. The forecast indicates a continued downward trajectory, with prices potentially dropping to as low as $1.83 in the coming weeks. Therefore, a short position on THETA network appears to be the most suitable strategy. An entry price around $1.97, close to the current market price, allows you to capitalize on the anticipated decline. To manage risk, a stop-loss order should be placed at $2.04, slightly above the current price, to limit potential losses if the price unexpectedly moves upwards. The target price could be set at $1.88, aiming to capture a portion of the expected price decrease while leaving room for potential market fluctuations. This strategy prioritizes risk management and seeks to profit from the prevailing bearish sentiment in THETA network. Based on the provided WorldCoin price history and forecast, a cautious medium-term investment strategy appears most suitable. The price history demonstrates a volatile trend with both upward and downward movements. The forecast indicates a downward trajectory over the next week, suggesting a potential short-term decline. However, the historical price data also reveals periods of recovery and potential support levels. Therefore, a long position is recommended for a medium-term investment. An entry price around $1.97 aligns with the current price and the lower end of the recent price range. The stop loss should be set at $1.87, just below the recent support level, to minimize potential losses. The target price can be set at $2.29, which represents a potential upside based on the historical high and the upper end of the recent price range. This strategy allows for a potential profit while mitigating risk by setting a stop loss and targeting a reasonable price increase within a medium-term timeframe. Given the price trends and forecast for hooked protocol, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a clear downward trend over the past 2 weeks, with the forecast indicating further declines. The support price at $0.2803 and resistance at $0.3163 suggest that the asset may continue to move downwards. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For a short-term strategy, an entry price of $0.295 could be considered, slightly above the current price to allow for some initial price movement. The stop loss should be set at $0.305 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.265, aligning with the lower end of the forecast and allowing for potential profit before the price reaches major support. Artificial Superintelligence Alliance shows a clear downward trend in its 2-week price history, and the 1-week forecast reinforces this bearish outlook. Considering this trend and the forecast price reaching as low as $1.08, a short-term investment strategy focusing on a short position appears to be the most suitable. The entry price should be set at $1.25, aligning with the current price and allowing for a potential price drop. To manage risk, the stop loss should be placed at $1.32, slightly above the current price, to avoid significant losses if the price unexpectedly rises. The target price should be set at $1.15, slightly above the forecasted lowest price, allowing for profit taking before potential support levels are reached. This strategy capitalizes on the bearish momentum while mitigating risk through a well-defined stop-loss order. Based on the provided Polkadot price data and forecast, a cautious investment strategy focusing on the short term seems most suitable. The historical prices show a recent downward trend, with the forecast indicating further declines in the coming week. The support price at $4.199 represents a potential floor for the price, while the resistance at $6.658 suggests limited upward potential. Therefore, a short position on Polkadot is recommended. An entry price of $6.37, aligning with the current price, would be appropriate. A stop loss should be set at $6.44 to mitigate risk if the price unexpectedly rallies. The target price could be set at $6.03, slightly above the lowest forecasted price, allowing for potential profit before reaching the support level. This strategy aims to capitalize on the anticipated price decline while managing risk through a well-defined stop loss. Given the historical price data and the forecast for Filecoin, the strategy suggests a short-term bearish approach. The historical prices show a fluctuating trend with a slight downward bias in the past 2 weeks. The forecast also indicates a downward trajectory for the next week, suggesting Filecoin may continue to decline. The support price at $3.73 acts as a potential floor for the price, while the resistance at $4.928 presents a barrier to upward movement. Considering this information, a short position on Filecoin is recommended for a short-term investment perspective. An entry price around $4.95 would allow you to capitalize on the potential price decline towards the support level. A stop-loss order should be placed at $5.10 to limit potential losses if the price unexpectedly rises. The target price could be set at $4.65, aiming to capture a decent profit before the price potentially bounces back from the support level. This strategy leverages the anticipated downward movement and aims to generate returns within a short time frame. Given the historical price data and the forecast for Conflux, a cautious investment strategy is recommended. While the historical prices show some fluctuations, the recent downward trend and the forecast indicating further declines suggest a bearish outlook in the short term. The support price at $0.1478 acts as a potential floor, but the resistance at $0.1982 remains distant, indicating limited upward momentum. Therefore, a short position on Conflux appears to be the most suitable strategy. An entry price of $0.151, aligning with the current price and the downward trend, would be appropriate. The stop loss should be placed at $0.159, slightly above the recent high, to minimize potential losses if the price unexpectedly reverses. The target price could be set at $0.147, aiming to capture a portion of the anticipated decline towards the support level. This strategy prioritizes risk management and capital preservation, taking advantage of the potential for a short-term price dip in conflux. Given the price trends and forecast for Ethereum name service, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential pullback in the coming week. The current price is close to the resistance level, suggesting that the upward momentum might be waning. Additionally, the support price is relatively far away, indicating a higher risk of a significant price drop. Considering these factors, a short position on Ethereum name service appears to be the more suitable strategy. An entry price of $34.50 could be considered, aligning with the potential pullback in the forecast. The stop loss should be set at $35.20, above the current price, to protect against any unexpected price surges. The target price could be set at $32.50, allowing you to take profits before the price reaches the support level. This strategy aims to capitalize on the potential short-term decline in Ethereum name service, while managing the risk through a well-defined stop loss. Given the avalanche price history and the provided forecast, a cautious approach with a medium-term investment perspective appears suitable. The price history demonstrates fluctuations, but the recent forecast suggests a potential decline. The historical price range of $35 to $41 indicates a relatively stable price range. Considering the support price at $35.20 and the forecast's lowest point at $34, an entry price around $35.50 would provide a buffer against immediate downside risks. A stop-loss order placed at $35 would limit potential losses if the price drops below the support level. The target price should be set at $38, aiming to capture a potential upward movement within the medium-term timeframe. This strategy aims to capitalize on a potential rebound while managing risk by setting a clear stop-loss. Given the price trends and forecast for Doge-Coin, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast suggesting further consolidation around the current price levels. Doge-Coin is currently hovering near its support price of $0.04302, indicating potential for a bounce back. The resistance level at $0.04961 suggests that a significant upward move might be challenging in the short term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.045, slightly above the current price, allows for a margin of safety. The stop loss should be set at $0.0435, below the support price, to protect against further downside. The target price can be set at $0.048, aiming for a moderate gain towards the resistance level. This strategy balances risk and reward, allowing for potential profit while mitigating the downside risk associated with the current market conditions. Based on the provided information for PENDLE, a short-term bearish strategy appears most suitable. The historical price data reveals a fluctuating trend with a slight downward bias in the past 2 weeks. The forecast also suggests a continued decline in price over the next week, reaching as low as $3.32. This downward momentum, coupled with the support price at $3.587, indicates a potential for further price drops. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current price of around $3.63, with a stop loss placed at $3.69 to mitigate potential losses if the price unexpectedly surges. The target price would be set at $3.49, aligning with the lowest forecast price, allowing for a profit capture before the market potentially finds support. This strategy aims to capitalize on the anticipated price decline within the short timeframe of the forecast. Given the historical price data and the 1-week price forecast for the sandbox, a short-term bearish investment strategy appears most suitable. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests the sandbox could drop from its current price to as low as $0.489, while the support price sits at 26 cents and the resistance at $0.6356. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of 57 cents, close to the current price, would be ideal. The stop loss should be set at $0.584, slightly above the entry price, to protect against any unexpected price recovery. The target price should be set at 49 cents, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at 26 cents. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to its forecast and near the support level of $0.2846. The resistance is at $0.4758, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $0.471 would be ideal, aligning with the current price. The stop loss should be set at $0.483 to protect against any unexpected price recovery. The target price should be set at $0.444, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.2846. Given the provided price history and forecast for ENG coin, a short-term investment strategy appears to be the most suitable approach. The price history reveals a downward trend, with the recent price hovering near the support level of $0.1426. The forecast further reinforces this bearish sentiment, predicting a continued decline in price over the next week. Therefore, an aggressive short-term investment strategy would involve taking a short position on ENG coin. A suitable entry price would be around $0.163, aligning with the current price and allowing for potential profit if the forecast holds. The stop loss should be set at $0.169 to limit potential losses if the price unexpectedly surges. The target price could be set at $0.145, aiming to capitalize on the predicted price decline while remaining cautious at the support level. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level of $8.146. The resistance is at $13.137, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $12 would be ideal, aligning with the forecasted price. The stop loss should be set at $13 to protect against any unexpected price recovery. The target price should be set at $10, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $8.146. Based on the provided Chainlink price information, a medium-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend, but the overall direction is slightly upwards. The forecast suggests a period of consolidation around the $24 level. This indicates a potential sideways movement in the short term, followed by a possible upward breakout in the medium term. Therefore, a long position is recommended. The entry price should be set at $24.20, slightly above the current price and below the resistance level. The stop loss can be placed at $23.20, below the recent lows and the support price. The target price should be set at $26, aiming for a potential upside move towards the resistance level. This strategy allows for participation in a potential upward trend while mitigating risk through a well-defined stop loss. Based on the provided Aave price data, the historical prices show a fluctuating trend with both upward and downward movements. While the forecast suggests a slight downward trend over the next week, the historical data indicates a strong support level at $295.92. This suggests a potential for a rebound in price. Considering this, a medium-term investment strategy with a long position appears to be suitable. An ideal entry price for this strategy would be around $310, which is slightly below the current price and offers a margin of safety. The stop loss should be set at $297, below the support level, to limit potential losses. The target price could be set at $350, aiming to capitalize on the potential price increase towards the resistance level. This strategy allows for a balanced approach, taking advantage of potential upside while mitigating risk through a well-defined stop loss. Given the price trends and forecast for EOS, a conservative investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests EOS could drop from its current price to as low as $0.721 in the coming week, while the support price sits at $0.4842 and resistance at $0.8494. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For this short-term strategy, an entry price of $0.803 would be ideal, aligning with the current price and the potential for a short-term decline. The stop loss should be set at $0.8494 to protect against any unexpected price recovery. The target price should be set at $0.745, slightly above the forecasted lowest price, allowing you to take profits before the market potentially hits major support at $0.4842. This strategy allows for a measured approach to capitalize on the potential downside movement of EOS in the short term. Based on the provided Tron price data and forecast, a cautious medium-term investment strategy appears most suitable. The recent price history demonstrates volatility, with fluctuations above and below the 24 cents level. While the forecast suggests a slight downward trend in the coming week, the historical data also indicates a tendency for Tron to bounce back after dips. Therefore, a long position is recommended with an entry price around 24 cents. This price point offers a balance between potential upside and risk mitigation. A stop loss should be set at $0.235 to limit potential losses if the price continues to decline. The target price can be set at $0.255, aiming to capitalize on the potential for a rebound towards the resistance level. This medium-term approach allows for potential profit from both upward momentum and any retracement towards the support level. Based on the provided price information for Suncoin, a cautious short-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight downward bias in recent weeks. The forecast prices also indicate a potential decline over the next week. While the support price sits at $0.01658, representing a potential floor for the price, the resistance at $0.02232 suggests limited upward momentum in the near term. Therefore, a short position on Suncoin with an entry price around $0.0218, near the current price, would be a reasonable starting point. The stop loss should be placed slightly above the recent high at $0.0223 to minimize potential losses from an unexpected price surge. The target price could be set at $0.0209, aligning with the lowest forecast price, allowing for a modest profit while mitigating risk. This strategy capitalizes on the potential for a short-term price correction in Suncoin, taking advantage of the prevailing bearish sentiment indicated by both historical price data and the forecast.